Hey guys, I'm Daphne Quay, your boss lady realtor, and this is my good friend and lender, Alejandro Juarez. Bam, bam, bam. Today, we are going to go over the home buying process from start to finish. So today we're going to be talking about the home buying process in Austin from start to finish. Every time I have a new client that is buying a home in Austin, whether they live here already or if they're relocating from out of state, I have the same conversation with them on the phone, and it usually takes anywhere from like 30 to 45 minutes depending on how many questions they have. So I just wanted to make a video and include Alejandro in this too, because if you're financing a home, this is a very like lender heavy process as well. So you can hear from both of us what the process encompasses and what to expect. The first thing that I will talk to a client about when they are buying a home in Austin is about getting pre-approved and talking to a lender. It is important to know that as a consumer or a home buyer, you have the right to work with literally any lender that you want. And I always encourage my clients to work with a local bank or a lender. I always tell folks to stay away from the big banks. You know all of them, like there's like 4 or 5 really big ones.
Like Wells Fargo, for example.
Who's Wells Fargo?
It might be
sounds like a big coffee company. Wells Fargo coffee. Generally stay away from the big banks and online lenders. I've not had consistent good luck with online lenders. I feel like it's been like 50-50. Sometimes they do an excellent job and sometimes it's a total crapshoot. So it's not really a risk that I would encourage you to take. So talk to us a little bit about like the pre-approval process, what that is, and then I'll tell you why it's important to be approved before you start looking for a home.
Yeah, so what I'll say first is that you'll hear a lot of terms being used, intermingled, switched. Pre-qualification, pre-approval can mean a bunch of different things depending on what lender you're talking to. At the end of the day, what you want to know is, has that lender verified all of the information on your application with documentation? Do they have your pay stubs? Do they have your tax returns, your bank statements? If you own property, do they have your mortgage statements? Do they have your leases if you're renting them? You want to make sure that everything is verified because you're putting a whole bunch of your money on the line. You are all in, as an example, when you go under contract. You're paying earnest money, you're paying option money, you're getting an appraisal. There's a lot that you're investing and you don't want to take too much of a risk.
And we'll talk about all of these terms momentarily, so hang on with us. Yeah.
You don't want to take too much of a risk is the point, right?
Getting pre-approved is important because you're getting an official letter from a bank or a lender confirming that they have reviewed your assets, they've looked at your credit, income, all of that, and it's confirming that you are good to go for this price range. And I do think most people have a pretty good idea already of like what price range that they fall in, but you have to have that if you're financing a home and then of course buying a home. Because our market is so competitive, it's really important to have a full approval letter before buying a home or making an offer.
Part of why the pre-approval also matters is because when you're making an offer, the letter of the company that it's coming from is important, right? That local lender reputation, it doesn't have to be us, it could be another local lender, but that reputation matters.
Once I've talked to a client about getting approved and explaining that whole process, we talk about the actual process of buying a home. Honestly, I like to leave the portion about like the type of home that they want and the neighborhood that they want to be in kind of till the end of the conversation to get kind of the nitty gritty, all the back end stuff out of the way. Generally, I tell people you're not going to remember everything we talk about on the first conversation. The first conversation and the first explanation of the buying process is really so they can start to get familiar with everything and have a point of reference when we talk about it down the line. And that's also why I made this video, so that you can reference it down the line in case you forget something, which you will, because there's so many little details to know when you're buying a home. And it's honestly something that you're only going to use when you're buying a home. So why would you remember it in your day-to-day life? I don't know. So once you have your pre-approval letter, I tell my clients we can actually start looking at homes. It really depends from client to client, but I feel like maybe 50% of my clients will actually find the home that they end up buying on the first day or two that we go look at homes. I also feel like in general, clients will typically look at about a dozen homes before making a decision. Sometimes it's way less, but it's not typically a lot more. I think like in the last couple months, maybe I've showed a client like 15 homes, but generally people already know what they want. and what the market is doing. I do feel that doing your homework is super important, and so many of my clients do. They're already online looking at different neighborhoods, looking at different school districts, different style of homes, price ranges that they want. And part of the reason you want to be pre-approved beforehand is because you need to know the exact price range you're in, and that'll of course affect the neighborhood and the style of home, etc.
On our end, what is also happening is that we are finishing up your pre-approval and setting up a consultation, a pre-approval consultation. That is a consult where we're going to look at different potential options, different down payments, different monthly payments, different tax rates. We're going to look at a lot of different things because one of the things that's really important to us is to set realistic expectations somewhere around or right before you begin to start shopping, so that when you're looking at these homes, you can have some of those numbers in the back of your head and thinking, yeah, we talked about this scenario. This feels like it should work out just fine. We try to do that, before they get out there. Sometimes it times out perfect, sometimes it doesn't. But either way, you're going to get that consult to make sure that you are setting realistic expectations.
So when we actually do go out and start looking at homes and you find the home that you want, the first thing I do is I try to get on the phone with the selling agent. In a real estate transaction, there are typically two realtors, the buyer's agent and the seller's agent. If you're buying a home, I would be your buyer's agent. If we are selling your house, I would be your selling agent, right? And for this example, you're buying a home. So I call the selling agent and I try to get as much information out of them as I can. A lot of times selling agents try to be pretty tight-lipped and not share very much information to try to get their clients more money. Ultimately, I think it's kind of a silly strategy because it's like, I think transparency is really important and that's how we get things done instead of just like playing games and going back and forth, but that's a whole other thing. So basically I'll get them on the phone and I'll ask them, are there other offers? For this example, and for this market, let's just assume that there are other offers. And then I try to find out how many. Sometimes they'll tell me right away, we have 6. Sometimes they're like, well, we have a handful. And I'll be like, great, is it more than 3? And they're like, well, I can't say. So, whatever. So I try to ask as many questions to see if I can get something out of them. And then I try to find out what price range we need to be in order to buy a home. Because there is so much competition, a lot of homes go for significantly above the asking price. For instance, I have a client that I'm working with. They are looking for a home kind of like in the $820 price range. They wanted to make an offer on a home that was listed for $780. I called the realtor and I just kind of blatantly ask them, like, what's the highest offer you have? And they don't typically like to tell me, but I like to test the waters to see if maybe they'll give us something. And then I'll start kind of low and I'll be like, look, my client is thinking of offering X amount. And basically where we needed to be was at 810. And I said, my client wants to offer 810. Will that put us in a competitive spot? And a lot of times realtors are like, well, that's good. I don't know. And I'm like, and then verbatim what I say is like, it would really help me if you let me know. I don't want to waste your time, my time, or our client's time. And if we're not going to be in a competitive spot, I'm not going to ask my assistant to put these documents together if we're not going to get the home. Mm-hmm. And then they'll pause for a while and they're like, okay, well, yes, that price range will help you or put you in a good position. Or sometimes they'll be like, no, you actually need to go higher. And then I'll ask, what that needs to be. Sometimes I get nothing. Sometimes realtors just don't even answer their phone and it's incredibly frustrating. But I do whatever we can with what we have to find out as much as we can to see if this particular home makes sense for you. Once we go through that, my assistant will send my home buyers an email with blank offer documents and a brief explanation of what they hold. Our contracts are I think they're 11 pages long, and I want to say there's 25 to 27 different paragraphs on there, and some of them are completely irrelevant to our transaction. So what we do in this email is we point out the very specific portions of the contract that are relevant to you. There's a portion of it that talks about oil and tidewaters. In Austin, we're not near the ocean. There's no tidewaters, and most houses don't have oil underneath them. So it's a non-issue, right? So we'll specify the pertinent points and then go over basically what we're going over in this video is the nuances of buying a home. We answer our clients' questions and come to a decision as far as what price we want to offer and what terms we want to offer for this home. Once we do that, then actually my assistant puts the documents together, and I mentioned this in another video, but it takes her about 45 minutes to an hour to do so. She'll put down the price, the terms, legal names, we need people's legal names, other documents and disclosures that might go with this, and then we are also talking to the lender at this time to get a whole package of documents together so that we can send it to the selling party. Once these documents have been put together, then we send it to you as the home buyer for digital signatures. The documents go to you, You sign, they come back to us. We wrap them up in a beautiful little digital file along with your pre-approval letter, and we put them in an email. Basically in the email, I will say, hi dear realtor, thank you for answering our questions, if I actually answered our questions, on your listing on 123 Banana Street. Our client loves a home, and I'll try to give some detail about the home to show that my client actually connected with the home. And then I'll say, I've also included our lender, Alejandro Juarez, who is so wonderful and has approved our client. Our client is very solid. They love the home. They are ready to go. They are motivated. I'll send it off. And then I tell Alejandro, yo, homeboy, call this realtor and let them know how solid our home buyer is. And he does. What does that conversation look like for you?
So the first thing I do is I'll send the seller's agent a detailed email to let them know who we are and how we work. Like, what do we do to make sure that this transaction is going to be smooth? But then I pick up the phone and talk to the listing agent themselves so that I can introduce myself. With any luck, I already know them or have worked with them before. That happens a lot. And if I don't know them, I just kind of let them know, you know, some very general details about the solidity, the quality of the file, and just giving them reassurances that there's not going to be an issue. We might talk about things like how quickly we can get the appraisal, or what's this person's, you know, ability to do this, yada, yada, yada. But the whole idea of that conversation is to build trust with all parties and letting them know that, you know, we are very much dedicated to making sure that not only our client receives good service, but that they will as well.
Because then they go back and they tell their seller, they'll say, this buyer is working with a very legitimate and solid lender. It's going to go through. Because every now and then you have lenders that can be a little bit wishy-washy, or sometimes like lenders that we don't know, or like online lenders, sometimes there's a lot of hiccups. And the seller wants to make sure that their house is going to sell and that it's going to happen smoothly. And if we can't guarantee that, we're kind of dead in the water. So by having a local lender or a local bank, that shows the selling party and the selling realtor that we are serious, we're motivated, and that we can actually go through. So this process of actually submitting an offer is very much all hands on deck. It's me, it's Alejandro, it's my assistant, and sometimes we need to get somebody else involved just to make sure that they look at your offer and understand that we are serious. Let's say in this instance that your offer is accepted. And then what happens? The buyer has 72 hours to turn in 2 checks. The first check is called earnest money, and that's typically 1% of the sales price. The earnest money goes to the title company, and they'll hold it in an escrow account until closing. If we close and everything goes as planned, you get that 1% credited back to you towards your down payment. So let's say you're buying a home that's 1.2 million, that's $12,000. And because our market is so competitive, sometimes the earnest money percentage can be higher. I think I had a client one time earlier this year do like 3% earnest money. They were super serious. They had lost out on a couple other homes and they were just like ready to get it done. So again, depending on the situation, we might have to go up in earnest money. The second check that you have to turn in as a buyer is called option money. In a normal market, option money used to be like $200 to $300. In this market, typically it's $500. I've had to turn in option money up to about $3,500. And that money technically goes to the seller. And what you're doing with that option money is you're buying anywhere from 5 to 7 days to do your inspection and buy an option period. So for this example, let's say there's multiple offers. The shorter the option period, the better. So we're gonna say you have a 5-day option period that costs you $2,000. That $2,000 goes to the seller and they also just hold it until closing. During that option period, you can choose to walk away for any reason whatsoever. And if you do, you get your earnest money back, your 1%. So $1.2 million house, your $12,000 that's credited back to you. During the option period, we do our inspection and bring in any other contractors if necessary to get quotes for things. And that's when we try to negotiate repairs if any are needed. Now, I mentioned during this option period, you can walk away. If we get through the option period without any hiccups, and again, we end up going to closing, that option money, that $2,000 in this example, is credited back to you towards your closing costs or down payment.
It's credited towards the closing costs or down payment because it's your
Just
it's
what
your
I
money.
said. It's credited back to you.
So after the option period, this is what is going on the lending side. When you go under contract, there are lots of things that have to happen. And from my perspective, timing is everything because so much is dependent on a few different periods. You heard Daphne talk about the option period. There's also another period that's called the financing period.
So when we submit a contract and you're financing a home, we have the actual offer document. And then there's one more important document that we turn in. It's called the third-party financing addendum. And that tells the seller exactly, of course, how much you're paying for the home and how much you are financing on the loan and what the terms of your loan are. There's a portion in the financing addendum that tells the seller how much time you need to get completely financed approved. Is that what you would say?
Yeah, to a certain degree, yeah.
Right. In a normal market, we used to put like 14 days for full financing approval. And you might be asking, well, like, I have my approval letter. What does this mean to have like this extra time?
So what that means is that when you get pre-approved, at that time, you don't have the actual property. There's not an executed contract. It is hypothetical because we don't know how the specific property is going to impact your approval. If you're working with a great lender, then chances are that you're not going to have a problem. But what we're trying to do is get your file into an underwriter and achieve what is called a conditional approval. A conditional approval means that your underwriter has gone through the file, has vetted it, and confirmed that all the work that we've done is correct, that the income, the assets, the credit profile is all fine. They might give us a list of conditions that require us to get updated pay stubs, bank statements, things like that. But everything else is going to be related to waiting on information about the property. Getting that conditional approval before your financing deadline is critical because we want to make sure to protect you.
So I mentioned just a second ago that like in a normal market or in Austin's market anyway, we were typically putting about 14 days for financing approval. Today, I've had clients do 8 to 10 days for financing approval. And why is that important?
It's important because if there is an issue, if we identify an issue, we have the opportunity of getting you out of that contract before that financing deadline is here. If you go past that financing deadline and find out that there's something wrong with financing after that deadline, then you've essentially potentially could lose everything that you've invested, the earnest money, the option money, the appraisal costs, the inspection costs. We don't want to put any of our clients in that position, which is why it's so important, going back, that when you do go under contract, that you understand that we're trying to be Kentucky Derby out of the gate and go as fast as possible, not because we're trying to pressure our clients or walk you into a bad position. We're actually trying to protect you, and speed is of the essence.
Yeah, so during that financing contingency, let's say we go with 10 days, if they find something in your file that's gonna throw everything off, we have those 10 days to walk away. And like Alejandro said, you get your earnest money back. So again, we're using this example of a $1.2 million house. That's $12,000 that you get back in your pocket. So once we move past the option period, our next big hurdle is the appraisal. So we get through the option period and the financing period, and then the biggest hurdle that we've got right now in our housing market in Austin is appraisals. And I almost feel like I could do an entire video just on this, but we're just gonna give you a very long explanation. We're gonna try to get in as nitty gritty as possible and give you some examples from real life clients that we've had this past year. So what was happening in the beginning of 2021 and even through the end of the year is because Austin's housing market is so competitive, most homes end up selling for significantly above the sales price. So if you're financing a home literally anywhere in the United States, you will probably have to do an appraisal. An appraisal is when you are using a lender and they send out a third party to look at the home. And they basically want to make sure that the house is worth the amount that you are borrowing. So for very simple numbers, let's say you're buying a house for $100 and let's say there's multiple offers on this house. So you are getting it for $120. The appraiser will go out to the house and they will look at the house and they will look at comparable homes in the neighborhood. And one of three things can happen. The appraiser can say, yes, this house is worth $120. Great. We close probably like 5 to 7 days after we get that back.
That's about right.
The second thing that can happen is that the appraiser goes to the house and he goes, actually, this house is worth $150. Freaking great. That means we have $30 in equity. Doesn't happen as much these days, but it does happen sometimes. And the last thing that can happen, and that has been happening a lot in Austin lately, is that the appraiser will go to the house and they'll look at your $120 house and they'll be like, actually, this house is worth $90. So what do we do then? Well, one of three things can happen. In a normal market, we would try to renegotiate the price. We can walk away from the contract. But what has been happening more often than not is that the buyer is expected to pay the difference between the appraised value and the sales price of the home. So again, $120 house, the appraisal comes in at $90. you're on the hook for $30. What else should we say about that?
Well, what I would add about that is that there are lots of strategies to overcome this. And like Daphne said, we could do another video entirely about appraisals. Just know that that is part of the reason that we're trying to hurry so much at the beginning, is to get all of the information that we need as fast as possible. We want to order the appraisal on day one. We want to get disclosures out. We want to get your file to underwriting quickly so that we can identify issues and get the appraisal back as quickly as possible, so that if there is an issue with the appraisal, we have plenty of time to try to fix it, rectify, renegotiate, find different loan options to make it work, and have plenty of time to do so.
One thing I will say too, when we find ourselves in multiple offers, or literally anytime you make an offer on any home, is we always look at comparable homes in the neighborhood to see if the purchase price that we are planning on is on par for the neighborhood. So I just gave you the example of like $120, right? Like the asking price for this house was $100 and we want to offer $120. We would look at all the other homes in the neighborhood that have sold within the last 4 to 6 months and say, okay, these houses sold for less or these houses sold for more. So in that way, we can decide from the beginning if we think we're going to have to pay the difference in the appraisal value. That way it sets the expectation from the beginning. And even at that point, you can still decide if you want to submit an offer on that home at that particular price.
The only other thing I'd add to that is just to know and to begin to process that if your appraisal comes in under value, it's not one of those things where you can say, well, I got a pre-approved for more. Can we just add that into the loan? It doesn't work that way, because the mortgage instrument is being based off of collateral, right? The home is the collateral. I like to make the example of a piece of merchandise like this watch. So this watch has a value to me, right? If I were going to lend it to someone or vice versa, I would say, hey, could you lend me $500? I'll let you hold on to this watch, right? That kind of makes sense because it's an equal exchange. There's value here. But if I were to say someone, hey, I need to borrow $10,000, I'll give you my watch for collateral. It doesn't really work that way.
LOL.
And so the mortgage companies are essentially doing the same thing. They're going to lend you money, but only if the collateral that you're borrowing the money for actually has the value that they need to secure their investment.
Exactly.
So they can't just make up the difference for you inside of the loan, which is important to know.
Side note on the appraisals, since we are wrapping up 2021 and getting into 2022, the housing market is starting to level out a bit and home prices have started to catch up with the market. We are seeing more homes starting to appraise at value, so that ultimately is less money out of pocket for our clients. Of course, appraisal shortages are still happening. They're not as common as they were in early 2021, but it's something that you need to be very aware of and just set that expectation from the beginning. We will hold your hand throughout the entire process so you know exactly what to expect, and we do our best to kind of like predict the future as much as possible. So after the appraisal comes back and we have the final numbers in place, what happens?
So at that point, we know that the appraisal value has been met hypothetically. We solidify the mortgage and we resubmit the file with all of the conditions and now the appraisal to the underwriter. We get a final approval and we're essentially done at that point. What's left is for us to receive a balanced final closing disclosure that happens between the title company and our closing department. They essentially just finalize all the numbers, provide a CD closing disclosure for us, and then we set up a time to review that closing disclosure together about 3-ish days prior to your closing.
And it has to be signed 3 days prior to closing.
Correct. There are some compliance requirements that would require you to sign that final closing disclosure at least 3 days prior to your closing. So those are things that will be a part of our process as well. We'll remind you and tell you why it is so important to get those things done.
So once all of that stuff is out of the way, then we go to closing. Closing can happen, I guess, one of two places. Typically, we do it at the title company, and we start working with the title company at the very beginning of the transaction, so we'll know who our title company is. There's tons of them. Or if you are buying a home from out of state and you are in your current state before moving to Austin, then the title company will send you closing documents, and we call that a mail out closing. They'll send a notary to you, you sign the documents, the notary grabs those documents, and then they FedEx them back to the title company. That usually will add about a day to the whole closing process. If you are doing a more traditional closing and you're coming into town to actually sign your closing documents, we'll go to the title company, we'll sign a stack of documents. Sometimes it's like this big, sometimes it's like this big. It just kind of varies, but it's generally a lot of paperwork.
Lots.
takes about an hour or so. I've had some closings take 30 minutes. I've had them take a little bit longer depending on how many questions the clients have. The title representative explains every document as you're signing it, which is part of the reason why it takes as long as it takes. Once you are done, the title representative takes those documents and sends them to the lender. What do you guys do when you get those documents?
So when we receive our documents, we actually send them over to our funding department. The funding department will take time to review all of the documents and make sure that everything that was supposed to be signed was signed and correctly, that there are no missing pages and no errors. Once they can confirm that, they will give what's called a funding authorization. That gives the title company basically a passcode that they need to release the funds from the mortgage company to the title company, from the title company to the seller. And then all of those things happen and are managed by the title company. And then we have a funded, complete, done close.
And this process that Alejandro just talked about can take anywhere from, I've had it take like 45 minutes up to like 3 hours sometimes, depending on. So typically by the end of the day, you will officially be a new homeowner. And once everything has funded, you will get your new house key and will have access to the house on that day. That doesn't necessarily mean that you should plan to have movers there that day, because I think things can happen between the title company or the lender, etc., that delay the process. So just side note, don't plan to move on your day of closing.
Yeah, if you watch one of our videos, we talk about why it's probably not a good idea to schedule your move on the same day of your closing. So check that out.
That is literally all of it. If you are thinking about buying a home and you call me, this is the exact same conversation we will have, because I want to make sure that you are super hyper informed. If you have more questions or if you have ideas for other types of videos that you would like to see, please leave a comment. I really love hearing from you guys. Also, before we go, please make sure to subscribe and click the notification button so you can be notified every time I do a video like this one.
Also, check out my website at www.thejuarezgroup.com. We have some educational videos on there as well that are more mortgage intense. So check them out if you have some time.
Tons of information. We've got so many resources for you guys. Anyway, that is what we got. This is Alejandro Juarez.
Bye, y'all. Thank you.
And I'm Daphne Quay, your boss lady realtor. Till next time.
Bye-bye.
Bye.